Let's go. Welcome, everyone. How's it going? Hope you're doing
Hello,
good. Hope you had a
hello.
wonderful weekend.
Yes, yes, indeed. Hello, everyone. We are back. Another week, another day, and great opportunities ahead of us.
Yes. This is going to be an interesting week ahead. Interesting week ahead. It's NFP week as well. We got NFP on Friday. Big things potentially happening. We got Ahmed. We got Void, Enrique, Michael. We got Dad, not my dad, but somebody's dad, or maybe just the name Dad. And then we have Bill from England. How's it going? How's it going, England and rest of the world? Where you guys from, by the way? Where are you guys from? Yes, our Victor is back. He's back from God knows where. He's been all over the place, all over the place. He's been traveling around. That's the cool thing with this job. You just bring your laptop, get a camera, get a mic, and then you'll work from wherever.
Yes, indeed. I feel recharged and refreshed. As you guys may have noticed, by the looks of my background, I am indeed back. But it's great. It's great to be able to not be fixed to any specific location and still be able to do the things you love doing.
It is a beautiful job to have, definitely. Today I wanted to ask you guys, like, I know that we always look for setups. Like, we always go up here, we into the market, we do our technical analysis, we'll look for setups. But today I would love to ask you guys in the audience if you're looking at any specific setups right now. I want you to give me the pair, the possible entry, stop loss, and TP, and then I'll put that up on TradingView here, and then we'll take a look at it and we'll try to figure out why this setup. Why do you want to long here? Why do you want to short there? How much weight did you gain after Thanksgiving? Well, my weight is steadily rising. The momentum here, it's like the ADX on my weight. It's definitely around, I'd say 60, and it's nowhere near topping out. And the MACD histogram has just turned bullish just in time for the December month, the Christmas holiday seasons here. What I'm hoping is that we'll have a bearish market structure shift on my kilogram equity curve going into next year. That's
That
that's what I'm hoping.
that happens when you ask a trader about his weight.
Yeah, it's like, how much do you weigh? Have you heard about the ADX? Do you know about the MACD? I'll explain it in
Oh.
simple technical terms for you. What I'm saying is we're hitting high time frame resistance. It's about to go down. It's inevitable. I don't know when or where, but at some time in the future, it's gonna break
And
that
for
uptrend.
sure, there's a seasonality to it.
Jessica, please. I urge you to reach out to support with this question. If there is any mistake made with the termination of your account, then you will, of course, support will help you out with that. I'm sure there's a reason for this. If there's, like I said, if there's any mistakes on here, the support will help you out. Unfortunately, we are not able to help you out with account related questions here. Please reach out to our support. Because you had an account, you also have access to Discord. Maybe there's someone in the Discord that can help you out with this as well. So make sure you get in there. And yeah, that's that short on gold. Now, I would love for you to give me the entry, the stop loss, and the TP for that short on gold, and buy Bitcoin at 93,840. I'm going to bring up my TradingView chart here, and we're going to take a look at that right away. By the way, guys, tomorrow we're going to have we're going to be announcing the winners of the Black Friday or the Black Week raffle. So make sure that you come in and to tomorrow's live stream as well. We're also going to have Pedro, which is the new community manager of the Portuguese-speaking community. All right, we're gonna look at Bitcoin first. So let's go look at Bitcoin versus the mighty dollar. Did you see Donald Trump's post about the BRICS deal? Basically, went out and said, like, I can't remember exact tweets, but it went out and said, like, there's going to be 100% tariffs on the countries involved with the BRICS if they decide to make a currency or something like that. And he wrote something like something about the mighty dollar. That dude, like he tweets like he's like he's like I assume he tweets in the way that probably like Hemingway would use Twitter, or maybe something like that. He's say the mighty dollar. We're gonna tariff you 100% if you damage the reputation of our mighty dollar. Okay, so we got Bitcoin here. Put the long tool on. Let's go into entry 9384. You want a long Bitcoin down here? Well, that is not a bad idea. Let's go out to the daily. Yeah. Target 100K, stop loss 92,300. Okay, and then 100K. So this is your setup. Now, the problem I'm having with this trade is there's I don't really see a technical reason for the stop loss. I do see. So the idea I wanted to do with this experiment is basically you give me a setup and I will critique it, And what I'm seeing here is I would say that if I would go long on Bitcoin within this general area, your stop loss will probably be my entry. And let me explain why. So first, what I do is I want to put on the fibs here. This is your setup. Now, first of all, your stop loss is on the 20 EMA and the daily. Okay, so that's the first thing that I'm watching. It's on the 20 EMA on the daily. If we add the fibs here, it's a good. Well, it's actually right on the 0.618 here. I like that. So the entry, I like the entry because it's right on that untested level, the breakout level. So the entry for this setup, I would say is solid, definitely. I think the problem here is stop loss.
The stop loss is not that bad on a second thought. Maybe on the daily you can't see anything, any reason for it, but on the H4, that's the last. That's one of the order blocks that were created in that impulsive move that created that daily order block as well, and it's an H4, so it makes a lot of sense that market might revisit that and bounce. Personally, I would I wouldn't put the stop loss that low. I would just go with current local area where we are right now and look for a stop loss there. But the stop loss makes sense to me. It does make sense to me.
Yeah, the more I look at this as sort of a intraday entry type of trade where you can actually manage this, from the daily perspective, I would say. From a daily perspective and perhaps from a swing trading perspective, I would say that the stop loss is too tight. But then again, when I actually go in and I look at the fact that, I mean, this would actually be a good level, that one right there. So putting the stop loss here, because then what we see here is we see a trending move here. And then it kind of breaks out here. And if, this is clearly the breakout candle. And then you have that pin bar candle right here, which also gives us the last low prior to the breakout. So from a technical perspective, I actually think this is a really good setup. But yeah, that's great. Henrique, I would say that what I initially thought was a too tight of a stop loss turns out that it actually does align with the way I would trade this. If the thing here though is I would probably wait for some confirmation. So what I would want to have is I would probably wait for price to come down and reach these levels and then wait for some type of confirmation.
If I may chip in, I if I may put my screen as well, based on the H on the daily, we are in a supply area, right? That's the daily order block, and it makes a lot of sense. The entry, just as you said, the entry is makes a lot of sense. The on the there is on the H4 somewhat of a reason. There's an outside bar as well. It's not my type of signal, but I mean it is there. The chart does tell us that there is a supply area as well on the H2, or I mean H4. And so if you, based on those things, I think this is a great entry. The only thing is that I wouldn't put my stop loss all the way below that area. If I think this area is not going to hold, then I should be have my stop loss right below that, or somewhat with a margin, of course, based on the volatility. But I would have either my stop loss tighter, or if I'm thinking it's going to not hold from this area, right? If I think this supply zone supply zone we're currently in is not going to hold, then maybe I should wait for it to interact with something lower, maybe something in the daily, maybe something on the H4. And but if that is the case, then I will have my stop loss way lower. So the stop loss placement does make sense, but yeah, I think it's a trade. I wouldn't do it that way though, but yeah, all the power to you, Henrique, for showing us that trade.
Good comment here as well. It says that he will enter with a low percent and add to the position to complete his full risk of this trade when he gets that 1 hour confirmation. And I think that's a really good way of doing it. I think for most people, I think that's the way you want to do it, but then it takes time to really figure out how to do it. Because I mean, when I started trading and when I started averaging into positions, what I did was basically is look at an area where I would want to get filled, and then I layered orders in that area, which is a really bad way of doing it, because then if your stop loss gets hit, all the orders will get filled. But if just only some of the orders get filled and the trade is a winner, then that trade is going to be a small winner, but the losers will always be big losers. So I think averaging into position with confirmation is the way you want to do it. Just have a small position at the area where you want to enter. If that position gets filled and you see that price is reacting to that area in the way that you want price to react, that's when you start adding to the position. I think that's actually something that I've started doing more recently, and I've started applying that. I can show you before we move on to the next example here. Or maybe you wanted to show something here on your chart, or maybe you were done with Bitcoin.
No, I was gonna say there are many ways you can do this. Of course, many a way to approach this. What I would You can either consider each, because when I see this on the lower time frames and you consider top down analysis, I identify two areas, right, where it's likely to bounce off. If we are going to reverse back to going to higher prices, which we expect at some time, soon, it's either going to be this area or something below, and we don't have enough information yet. Based on what we have, it would be either one of these two areas that I'm pointing out. If that is my thought, then I can approach this two ways. Either I'm going to have my stop loss at the last entry, right? If this one is not the area to be bouncing off, right? If this isn't the area, let me change the template on that. Maybe something like that, or maybe just change the. If this is not going to be the area that stops price for that reverses price, then it's going to be something lower, right? If that is my thought, and I can do two things. Either I put my stop loss on both trades at the last line where the setup is still makes sense, which would be either this area or all the way below that daily order block, and have multiple entries as price is going through them. That makes a lot of sense. Or you can consider these two areas as separate entry areas. So you enter with a tighter stop loss, with a more favorable risk reward ratio. But if it gets tapped, if you get tapped out, you still have another chance in at the other one if you get a confirmation. Those are the two general ways to do it. Break it down into separate entries, or just consider one big setup with different possible entries and holding them all until the whole setup gets invalidated. Both of them are valid ways to approach the market. It's just your personality and how you can handle the win rate, because of course that is going to change dramatically depending on which approach you decide to take. So just another way of looking how Henrique is doing it is it's a nice way of approaching the market, I think.
Yeah, definitely. And let me pull up my trading view here, and I will show you one trade that I'm in. Give me a second. By the way, guys, you see up here at the very top corner, we got the, where is it? Where's my, right there. No, it's
the other side.
Right there. It's all mirrored. So I'm like, high stakes plus raffle. We got everyone that buys an account. Last day today at midnight today. The raffle is closing, and we're gonna do the announce all the giveaways for the raffle tomorrow. So make sure that if you're looking to get an account, now's your last chance to get that account, and the new 10K high stakes account for only $68, and also enter the raffle where we're gonna have 50 prizes, 50 winners.
Wow,
Dang,
nice.
a lot of stuff going on. Okay, so speaking of averaging in, I'm currently in a trade on USD CAD. So, and we're going to continue with the trade setup in a bit. Now, this is USD CAD. I really like. This is something I talked about with Saul as well on the live stream we had on Wednesday, where you have a big move to the upside, a strong move to the upside, and then price slowly moves back down to the breakout area. And here what we see is we have, actually I did enter a trade on this Friday, then I closed it for a small loss here, and then I entered a new one today because I see great confirmation here. And also if we put on the indicator here, we see that it's reclaiming the moving averages and everything. It is a long signal as well. It's just that it's not the perfect example of a long signal, but it's still like looking at market structure. I like what I'm seeing here. And on the daily, it's also sort of a daily retest level right here. And I got my stop loss well below the daily 20 EMA. And I'm basically looking for a move. If we have a solid breakout, we're going back to prices from 2020, but I'm basically looking for a move up into the high of this range right here, where I view this as sort of like a fake gap. But then, so if we have a major breakout on USD CAD, I do expect that we're going to get that move to the upside. And I've entered this with a very, very small risk. If this 4-hour candle closes like this, it would add some confirmation to the technicals of this trade, because we do come down, we have a slow move, a slow move to the downside, hits the breakout level right here, confident with the RLZ, which is the area between the 0.618 and the 0.786, and then we have a break of structure on the lower time frames. If you look at the 1 hour, it's a very clear downtrend, W formation, and the break of structure. And you see that the 4 hour is pushing higher as well. And then something that I've started looking more into, and this is part of my, for those of you who don't know, I'm currently studying for CMT level 1. I'm gonna have the test this summer, and right now I'm in a section of the study material where we talk about oscillators and basically oscillators, moving averages, and the ADX indicator. And it's really fascinating when you really truly understand how these oscillator works, and especially the ADX. Now, the ADX is quite special because it's really giving you a good insights into the strength of a trend. So in a future live stream, I will have, breaking down these indicators, how they're calculated, how they work, and how they can apply it to your trading. But if you're watching this and you're not really sure which indicator you should be using or how you should be using them, well, when it comes to oscillators, they're pretty much giving you the same information. The MACD, the RSI, and other indicators are giving you pretty much the same information. So it's recommended that you choose one. If you're going to use an oscillator, which I kind of recommend, it's really good to have in your technical trading, you should go with one, and then you should learn the details of that indicator and the signal that it provides. But just go with one. There's no use having three different ones on the chart because it basically give you the same thing. The RSI, for example, gives you overbought and oversold signals. The MACD doesn't necessarily have oversold and overbought, but it's the same thing. A high MACD would be a high in the RSI as well. The MACD, however, is quite sophisticated and it gives you a lot of different information. And then it's also recommended that you have a moving average. If you're going to be using indicator, you want to have one oscillator, one moving average, can have two moving averages as well, but one moving average, and the ADX. The ADX is very, very powerful because if you want to make money trading using technical analysis, you want to make sure that you're getting in early on a trending move. Like it's the trending moves, the directionary moves where you make most of the money. Okay, now can be trading in a high time frame range as well, but there will be trends between range high and range low. And the ADX gives you a very good way of looking at when you're potentially in a trend and what the strength is of that trend. So if you go to the daily, for example, you can see here that on USD CAD, you can say that you have a ranging, the potential start of a ranging move here. And it's important to remember that a rising ADX, they will rise in a strong uptrend and downtrend. So the ADX does not follow price. The ADX will go up if there's a strong uptrend. It will also go up if there's a strong downtrend. When the ADX is trending to the downside, that means that the current trend is losing momentum. And it's very obvious here with USD CAD because you have this move, you have a down move starting, around this time, and it creates a bottom on the ADX. The down move is accelerating, which shows in the ADX. The ADX is accelerating to the upside. And then you hit a low, and the ADX hits a top. But on both of these moves, the ADX is just trending to the downside. And this is a good example of a possible range forming here, because if price would just go like this, then the ADX would just continue down. But you see right here, on the break above the range high, right here, you see the bottom being put in on the ADX. And that is when a strong directionary move starts, up until this point where you put in a top on the ADX. So the ADX is actually a very powerful tool to use to determine if you're in a range or a trend. And I actually have this built into my indicator, for example, to help me determine when it's a trending market or a ranging market. And when you're building, for example, automatic trading systems algorithm, the ADX will tell you if it's a ranging market or a trending market. Look at, for example, here, from that point here to this point here, the ADX is basically losing momentum while USD CAD is in a sideways trading range. But then it breaks out, and that's a possible new trend form starting. So yeah, very, very interesting stuff. And the ADX is very, it's not very popular. Not a lot of people are applying this into trading. But it's one of the most commonly used indicators for when it comes to professional professional trading using technical analysis. Yeah, okay, so that's actually not what I wanted to show with USD CAD. What I wanted to show here with USD CAD is when the market came down to this level, I entered right here a small position. And then when you have confirmation, if price goes above that level, closes a bullish candle on the 4-hour, then I will add to this position. So right now I'm in like below 0.1 risk on this trade. And I will increase that to 0.2 risk with the, I'm probably not going to be, go ahead.
That's in about 30 minutes, right? 33 minutes.
Yeah, about 30 minutes. Okay. Feel like I went kind of off topic there with the indicators, but let me know if you guys have any questions on that.
We have that perpetual question, that that forever question, right? The never-ending question: which is the best indicator? What's your take on that, Jonatan?
Okay, so the best indicator. Now I'm gonna have two questions to this. Two answers, not questions. So let's imagine a scenario where you have to mention an indicator. Let's say that for the rest of your trading career, you're only allowed to use one indicator. And we're not talking about drawing tools. If it would be drawing tools, I would say the fib probably. But one indicator for the rest of your trading career, no other. That's a tough question. It really is. Which one would you go with, Victor?
I would say the ATR, and I'll tell you why. I know that many indicators they are telling you something. They're basically a price calculated in a different way, right? They have a formula. They take price and they calculate a certain value, and based on that, they create that indicator. And because it's based on price, you can make, there is edge in there, although there may be a lag usually with indicators, but there is edge in there. However, with ATR, I would say there is a natural tendency of price of anything that moves to come back to equilibrium, right, to the mean reversion, and that's the power. That's something that's universal. Doesn't matter what asset you're trading. That can be quantified in the ATR by knowing when you are overstretched and knowing how much room there is for the move, for the typical move. I think the ATR is that one indicator if I had to choose one.
But then the ATR it's you can calculate yourself.
Yes.
That's the thing. So I mean, if you really had to choose, then you would probably tell yourself, well, you know what, I can actually calculate the ATR myself. But there are indicators out there based on information that is not available in price.
Okay.
Do you know what's not available in price?
Well, volume isn't. I mean, volume is a different information, which is, besides price, and that is important, of course. I mean, not we all, but if you prescribe to that idea that the market buyers and sellers are the ones that move the market, then it gets very interesting to know where they bought and where they sold, right? So, and that's where volume comes in.
Yeah. So exactly. So I mean, and we have a couple of good answers here. We have Henrique saying volume indicator and price action. Billy Bach says VWAP, and VWAP is a volume-based indicator. I think I'm not using VWAP that much, and it's also because in the Forex market, volume is, because the Forex market is decentralized. So, for example, if I put on the volume here, you will see that this, I don't believe that the volume that we're seeing here is calculated and reported in the same way as volume is in the stock market, and this is only for Oanda. This is only for the volume traded on Oanda, I believe, and it's decentralized. So volume is not as important in the Forex market as it is in, for example, the crypto market or the stock market. But I also trade crypto, and I do have interest in the stock market because I'm heavily invested in the equities indices, right? So the stock market, I do care about that. And when looking at the S&P 500, I do look at the futures contract on the S&P 500, which is traded on a centralized exchange, which means the volume data is raw. So I would say that volume is probably the one thing that I would like to have on my chart. And there's different types of volume-based indicators. One of them, for example, is on-chain on-balance volume. So on-balance volume, I think, is a very powerful one. But just having the volume bars on the price chart gives you sort of almost like a superpower when it comes to technical analysis. It's very underutilized in trading, I would say, especially in the right way. But the one thing that you want to look at volume as confirmation of price, or what volume does is it confirms price. So we can look at, for example, we can go and look at a crypto which is called AVAX. So this is a really good example of volume validates price. You have here, you see that whenever price hits this resistance area, you do see obviously an increase in volume. So you get the resistance here, and then you have a couple of volume spikes here, but no real, like, it's sort of like the same. You have volume coming up here, and then you have a couple of volume spikes. But we want to see when there's an actual breakout. When there's an actual breakout above this resistance, you want to have a big influx and an uptick on volume. You want to see a volume coming in that is not seen within this overall range. And when you have that breakout, this is when you have a big difference in volume. That volume spike is much bigger than any other volume spike within this range. And it keeps coming in. It gets bigger and bigger and bigger. And you see that what was previously the high spikes on volume is now an uptrending with higher and higher spikes. So what happens here on AVAX is we see that the resistance breaks and volume confirms it validates the price trend. So that's how I would want to look at volume. We can go back to the actual breakout, and you see that there is volume coming in, and the spikes are higher, and they're more frequent. So it's very strong. So I would say that I do understand your reasoning with the ATR, though, because the ATR is just logic. It's just a very logical way of looking at the markets, because everything, I mean, if you have a daily average true range, the daily ATR, then if price is above that ATR, then price should come lower. And if you have a setup where you see that we're well below the daily range, there is a big possibility that price will, start moving with volatility to kind of fill that ATR gap. So the ATR is a good number to have. I would also say that the ADX is a very powerful indicator, because it has quite a complex mathematical formula behind it, and it would be quite difficult to do this calculation on your own. So to answer the question on now which one is the best indicator, it's interesting here because I say ADX, Victor says ATR, and then we both say that volume is important. So it's really what it comes down to is you have the indicator that you have, and you should use the indicator that makes sense to you and the one that you understand and you can use. But I would actually say that if you want to be trading with indicators, you want to look at a combination of using the ADX, an oscillator, and moving averages, and then also maybe experiment with the ATR. But having an oscillator, moving averages, and the ADX will give you good ideas and possibly also good signals based on that combination.
Yeah, there are different types of indicators, and what you said earlier, you don't want to have the same type more than once, because you're getting the same kind of signals, just maybe earlier or later, and it's not adding any value to the signal. Instead of looking for different types of indicators, depending on what you're trying to assess, right? If it's your trading, if for your strategy the trend is important, then you want something with moving averages or ADX perhaps. But if you are looking for, let's say I use the ATR for targets, right? For intraday targets. If I know what typically the day will do on average, then I know that what level is realistic to be reached within this day, right? Because the ATR is based on a specific time frame. So, but that's a very specific thing. I don't use it for an entry, for example, but I use it for targets, or perhaps you can use it as well for your stop loss. But as you can see, you need to be, when you're using indicators, you need to be not use it because you see other people use it, but knowing what it does, what is the type of indicator, what kind of information is giving you, and asking you, do you need that kind of information for your strategy or not? Is it something useful? And if it is, what do you do with that information? When in my case, I use it for TP, not for stop loss, but you could for stop loss as well, but only for that. I don't use it for the entries. But then again, I have another strategy which I don't really talk about very often, which I use it for the entry actually. So it depends on what the strategy is based on, what the idea behind it is, that will make one indicator more adequate and indicated to be used, depending on the context, right? So before you can make that decision, you got to know what is the strategy, of course, and what does the indicator does, so you can match the indicator to the strategy, to tap into its full potential.
Yeah, that's very well said. So we're looking at a trade setup here. You have to confirm the entry and everything. It looks like you get stopped out on this one, but it doesn't matter. We'll take a look at this one anyway. I do assume that it's one. Okay, so I look at this. Now you probably entered like around this time. I believe you entered on the move up here. What do we think about this trade? So first of all, I would think that this is on the 15-minute. Let's go to the 5-minute. 5-minute, it's interesting with this level kind of being broken, but then I would want to have, like, if I'm going to be trading this trend, then I would probably have my stop loss at least above this area. And if you look at the 15-minute, what we have here is actually, I would view this as a long opportunity, because I would look at the local uptrend, of course, something like this. And we also have a support area around this level. And if we go to the 4-hour, you can see that price came down and hit support. On the 1-hour, it came down, hit that support, broke structure on the 15-minute like this. And now we have an uptrend. And I would be careful with a short like this because you're basically trading against the trend.
However, there is a break of structure on the H4, and price did print a daily bearish order block. The only thing is it hasn't retested it yet. So I would assume that it's going to retest it and tap into that bearishness before it continues lower, meaning it might, the structure is currently showing breaking that break of structure on the H4 may not the only structure is going to create while going lower, if it is going lower, right? Maybe I can show my screen so I can
before you go and look at the screen, it's just look at all the wicks here on the daily. Like it's just a very condensed area here on the daily. I feel like the market seems quite indecisive. You also have that doji candle, you got the wicks all over. It's like you have a strong move to the downside, but it's not really convincing in the way that price slowly makes its way back up. So, but yeah, I get what you're saying. Let's take a look at the chart.
Okay, so I'm gonna show my chart. What I see is this, right? So we have on the weekly time frame, there is reason to go bullish on gold because we have an bearish bullish order block that has been formed, and now we are retesting it. So on the higher time frame, I'm looking for that entry area for that long. On the weekly, we have a reason for the weekly to go long. If you go to the lower time frames on the daily, what we had is basically we haven't, before we created this order block, we haven't touched anything to the left, so there wasn't really a reason to stop price from going higher. But we did create that order block recently and we haven't tapped into it yet. The fact that we created it makes me take that short more easily, because I am at least in the assumed direction of the order flow, because this is the first step for price going lower, creating that daily order block. But we haven't tapped into it yet, so I would be a little hesitant to go short right here. If we go to the lower time frame, we did get a break of the structure, right? Right here we had an established uptrend. We broke that, so that makes sense that we can expect price going lower. But as I said, it hasn't tapped into anything to make it go lower yet. So I would assume this is, I would prefer, let me just put it this, it's personal, of course, I would prefer it do this kind of price action within an area of higher time frame supply, and that is above us. It hasn't reached that yet. So maybe this is not the only structure, because as price is reversing, it takes time, and it doesn't always reverse on the first structure it creates. Sometimes it breaks it and it forms another one, and maybe on the second structure it's going to reverse, or maybe even on the third one. So I would prefer having it do that reversal structure on the higher time frame area, which makes the probability of it actually reversing much higher. So that's the only issue I have. But I understand the break of structure and the reason of someone going short here. It depends as well on the time frame, because if you're on the TP is what, 2631, which is actually on the very lower time frame. So it makes sense to me. If you go lower time frame, sure, yes, I would definitely take it, since you have a break on the H4. For a swing trade, I wouldn't be so certain to take that. On the lower time frames, yes, for certain. Although I perhaps will have to look a little longer to look for the reason to go short on the lower time frames as well. But it depends on how many alignments, how many time frames do you need for your alignments. This area already looks good to me on the 15 minutes. So yes, I would say it's a great setup. Not to hold very long though.
This is it's a good comment. Now we're not like I'm looking into the idea of having subtitles, like live subtitles. It's not something that YouTube has built in, but it's something that I'm trying to figure out how we can have live subtitles. So we're working on it. That's yeah. So
That would be cool though
we
for everyone who's, but difficult, I
yeah,
suppose.
yeah, it's quite difficult to, well, but yeah, I'm looking into it, and hopefully we can get that set up soon. So before we move on with the setups, I kind of want to give a general overview of what I'm looking for this week, because I do like doing that on a Monday, giving you guys overview of what levels I'm looking at, especially on Euro USD. I think Euro USD is a good benchmark of the overall market, the overall macroeconomics, especially now in this situation that we are in with basically the scenario we are in right now. If you look at the macroeconomics, the things that is driving the price of Euro USD right now is the fact that we have a relatively strong market in the US and a weak market in EU. Now this tells us that the market is strong in the US. The Federal Reserve is a little bit hesitant in lowering rates, basically. But in the EU, we have a very weak market, and they're thinking about potentially pausing the rate cuts, or actually increasing or decreasing risk, decreasing interest to stimulate the economy, right? So you have a weak economy in the EU, and there's a central bank divergence, basically. The yield spread is it's diverging, basically, and the weakness is very visible here on when looking at the Euro USD. Who's this Paladin guy everyone's talking about? Everyone says that you look like Paladin. Who's Paladin? Have you heard about that?
I didn't know who Paladin is, but apparently he's someone on YouTube. I don't know him. I haven't. I didn't know about him before. Never heard his name before. It's only after people commenting that I look like him. What can I say?
Right, life. Yeah, all right. It's Life of Paladins. It's that Paladin guy. He had. Okay, I'm pretty sure you're not Paladin. Okay.
Am I? Maybe I am.
Maybe, maybe. No, so we have an interesting divergence here with the EU and USD, and then of course we have the situation with tariffs coming in, and now there's the tariffs coming in with Trump. There's so many different theories on how that will move the markets, but that's right. I'm not going to comment this, but I'm going to pull it up because I do feel like it's, you're not Paladin and, I wouldn't probably not have you on here if you were for reasons that people know or may not know about.
Someone is convinced that I am. That's weird.
Interesting.
Yeah.
Okay, so you're... Yeah, he's not Paladin. He's definitely not Paladin. Okay, now we are obviously seeing. Okay, yeah, I do remember that there were some problems with a fund that they were running together, and now all of a sudden he's not really.
I didn't even know. I don't know who Paladin was or is. I don't really know the person. I have no idea. I just knew that he was or is a trader that has some presence on YouTube, but I really have no idea who that person is. So it's all fine by me.
Yeah. Okay, let's move on. Now, looking at EU. I want to. You guys know I look at seasonality data as well. So there's one really obvious seasonality trade that I'm looking at for the euro, and it's based on this, and you'll see that the dollar currency index pretty much looks the same. You see here that at the end of November, beginning of December, you have a really strong uptrend on your USD, and the seasonality points to that, and of course this also tells us about the dollar currency index, because it's basically the same chart but in reverse for most of the cases. So I am, for that reason and that reason alone, no, well, not that reason alone, but for that reason, I am looking at a potential shift in the market structure for Euro USD and trade that potential seasonality pattern. We also have, I'm going to call it a head and shoulders. Victor is going to call it a Quasimodo, probably. It's but something like this, right? And if we break the neckline, we have a break of structure basically, and my TP would be this level right here. So it's quite a big move. I mean, from that level to here, it's like a 160, 170 pip move to the upside. So we do have time to get into a move like this. Well, I just need price action to confirm this idea. But right now, the everything about the fundamentals of EU is very bearish. We also had the manufacturing. I believe it was the manufacturing PMI coming out this morning for parts of the euro area, which was not very good. I believe last week or the last week before that, we had a French manufacturing PMI coming out saying that basically France is in a recession. There's also a lot of political instability in France. There's also political instability in Germany. And the new government in UK seems to not be doing wonders for the economy. So EU has a lot of struggles, a lot of things they need to take care of from an economical and political point of view, while the US is just, they're on a rave right now. They're just partying. They're just like, it's just going crazy. They're like all over, spending money. Everything's going well, so yeah, so fundamentally EU probably going to move lower. But then again, I also see that the dollar currency index is at a high. Let's see, which one is that? This one. We are, testing the range highs here for the DXY, the dollar currency index. But looking at the lower time frames, we do have bounce down here on the daily, and if we can reclaim like this area, then there is the possibility of seeing a move higher, I believe. But right now, what I'm seeing is a break of structure, a possible bottom, a possible top pattern being printed here, and you can obviously, of course, see that. Yeah, and if you look at the ADX, you also see that the trend is definitely slowing down here as well. Yeah, it's going to be very interesting to see what happens here. So what I'm looking at is
we have a break of structure on the daily on the DXY as well. So and it is at a monthly supply area. We created a weekly order block, a bearish one, a fresh one. So I think we will be retesting those, the weekly and the daily. Maybe I should shortly, before you continue, shortly show my screen, but to let people know what I'm talking about. This area, that's the monthly order block, monthly supply zone. If I zoom out a little bit, that's the monthly that we're still dealing with. The weekly create just a a fresh order block that we haven't retested yet, but we probably will, and we have a lot of reason for price to move low from this area. It doesn't mean it's going to break the trend, the overall trend necessarily, but it's likely it's going to have some kind of effect on price as it gets into this area where the daily, the weekly, and the monthly, all of them are telling us that that's a great area to be selling. Doesn't mean it's going to go all the way lower, but it's going to have some kind of effect. And if that happens, then it makes sense on the euro to have a kind of a pop. But that's not currently, we're not there yet on the Dixie.
No, I'm looking at targets to the downside if we break down, because basically what I'm looking at here on EU is if we already had a on the 1 hour, this is not looking very bullish. I mean, we broke below this level, we retested it once, retested it twice, and we're just seeing selling pressure coming in here. We do of course have the manufacturing PMI from the US coming out in about 1 hour, and we're going to be looking at that, and then we're going to be ending the live stream like just a minute or two after that, the news, just to look at the initial reaction of that move. But that's going to be telling, might tell us if that is strong for the USD, then I think that's the last push that EU needs to get back below this level. And it's actually below this level that I'd be ready to short this. And looking at targets to the downside, I do see a few valid areas, and the first one is around that, and then this one. But then we have if you go to the monthly, like that level right there on the monthly aligns also, I believe, with the weekly level right here. And that's right above parity for EU. So these are the levels that I'm watching. These three levels. If I decide to short this, and if we're going to see a strong push to the downside on EU, then I'd be looking at this as my entry, stop loss above the whole structure. I would be looking at that as my TP1 for a move all the way down here. Now, remember, we're talking about a 400 pip move to the downside. So it's a massive move. There's a low probability that this last area will be hit. But what I'm thinking is something, we'll see something like this perhaps, and I'll be able to use every high as levels to manage the position, take a new trade, add to the position, and things like that. But it can happen quite quickly once it starts to move. So basically what I'm watching is...
Let's not forget we have NFP on Friday.
Yeah, that's a big one.
Things moving quickly. That could be the catalyst.
Yeah, I would love to be in a short position on this before NFP comes out. Like, if I could short this tomorrow, Tuesday, and then Wednesday, Thursday, and then maybe NFP on Friday here. I would love that to be the case, because then perhaps NFP will be what pushes price lower. But I think it's the Euro USD short is not about... I think it's more about euro weakness than it is about dollar strength. So I think has more to do what happens in Europe than the numbers coming out from the US. Now, of course, if NFP comes out and the labor market is very strong, of course, that would be good for this trade. So we'll see. We'll see what happens. It's going to be interesting.
Maybe on the same topic, I can show my chart because it's kind of interesting as well for different reasons. Of course, we look at different structures and things, but in my way of looking at the market, we already have a break of structure on the weekly, right? That's the neckline that was broken a long time ago, 2 years ago, more than that actually. And we're coming back. That's the highest point we had. We're coming back to below that 50% retracement, and we only have two areas of possible areas. If price is going to go up, these are the two areas that it's likely to that are more likely that it will use, right? And we tapped into one already, which is where this wick, right? We tapped into this entry order block on the weekly. So that makes anything that comes out of after this tapping into um, very, very interesting, because if we are going to have a reversal, a bullish reversal, we already got into one of the two likely areas that is going to use to make that reversal. Doesn't mean it's going to make a reversal, but if conditional, if it is going to make a reversal, this is a great area to have on your charts. And even if it's not going to be a reversal, just the fact that there's an entry order block on the weekly time frame, mind you, weekly, it's going to have some kind of effect on price action on the lower time frames, of course. And what do we see? We see the weekly time frame forming another bullish order block. That can be a signal for the weekly time frame, right? Because it does it at the specific place that you expect it to turn around, which is that weekly entry order block on the bigger quasi structure. So those two things on the weekly is that signal is promising. On the daily, I would this is the area that needs to be broken for me to get long, and it hasn't broken it yet. And as long as it doesn't break it, to me there is no break of structure on the daily, and I can't, even though the weekly is very enticing, I'm not going to participate unless I have a daily reason as well. And I don't have a daily reason to go long on a quasi yet. There is a fresh order block here, and I'm waiting for price to get into it. It hasn't done that yet, to maybe catch an entry long, but it's not going to be because of a break of structure. It's going to be something that I hold quite a much shorter time. So it's not going to be applicable for that weekly signal that we got in last week. So, but it is interesting. As long as the daily doesn't break the structure, I'm not going to be looking for a long unless we have alignment on the daily and the H4. You were going to say something?
Yes, gonna answer this question. Yeah, if you buy a 5K high stakes account, you will enter the raffle. If you buy any account until midnight today, you will enter the raffle. Someone asked midnight on what time zone. I would probably say around probably GMT. Probably GMT. I think that's
Okay.
a safe bet. So what was I talking about? Yeah, that's right. The candle close. Do you have, because I'm basically watching the same level where you said you have to have a daily break of structure. I'm looking at that same level. Do you need a daily candle close above?
No, in this case, not for the break of structure. I mean, the rules are just I decided them, so they're personal. It's not a universal truth. But in
Isn't that
my
nice? It's a
world,
nice career just to be able to like, I decide the rules.
I mean, the rules of my trade plans, because it's mine. I don't use the close. I use just any wick, any price comes over, and to this area to me is a break of structure, and that's personal. That's why I say that, and the reason is that it takes more time to have a close there, and I don't want to be too selective with the break. If it gets over, it gets above that area, then I consider it a break of structure already without the close. But it hasn't
Nice.
done
Okay.
that, and it's on the daily. It hasn't. It's on a daily quasi that hasn't been triggered, and on the H4 as well. There isn't that break, and I need that break before I start looking for an entry. I mean, at least if I'm going to hold that for a couple of days. If I'm going to only make perhaps a long from this area, which is a fresh order block, if it gives me the alignment, then I'm going to be targeting something much more locally, not use that bigger macro structure that I showed on the weekly, right? But if we do get that daily break, the structure, then I can start looking for a much sustained movement of euro going up, which I don't have the reasons to think that direction yet.
Okay, EuroCAD. I gotta pull up EuroCAD here because this looks like a really good short opportunity. I missed a. Maybe I didn't miss that. I think maybe I took. I think I might have taken that trade though. But we have a new opportunity here, and I'm thinking about perhaps looking for a short here because it's a really good level here for EuroCAD. Right inside the reload zone, we have a break of structure. We broke below this range right here, break and retest at the range, and we're now also getting rejected, and we can add a level right here. We never got above that one. We're still in a downtrend here. I think because we have the previous range highs here. If you do that as a range, not really below that level though. It doesn't matter though. Like I can't focus too much on historic price action. I think it's most important to look at most recent price action and how it's reacting to the levels. But I do like that level. And then if we enter that range again, I think this area here could be a decent take profit area. So let's see what that looks like on the 4-hour. Unfilled gap. That's interesting. That gap never got filled. That is interesting.
Why is that important for those viewers who are listening to you? Why is it important if the gap isn't filled? What does it tell you, or what does it tell a trader when a gap isn't filled yet?
So there's actually a very big statistical significance to gaps. I don't know what these statistics say for EuroCAD. I do, however, know for EURUSD that a gap on EURUSD has a very high percentage chance of being filled within a certain time period. So when you have a gap that's unfilled, you can look at that and say, well, if it aligns with, for example, if it aligns with this setup right here, there is a fairly high chance or high probability that the gap will be filled sometime in the future. Now you have to look at the specific statistics for that for each pair, and I don't have it on top of my head, but you can easily look this up. It's a well-known statistic. So you can see, for example, when we had the gap on EU, you like a popular strategy is just short EU at resistance down to fill the gap, and the gap is, let's go to the daily. Where is the gap? Is it not shown on the daily? Is that small area the gap? I don't know. But it's very visible here on the 4-hour. See, the gap goes from here to here, and you see that it almost got filled here. I would argue that is the gap being filled, because if you would have traded this, you would of course have exited position here. There is a big statistical probability of gaps being filled on certain pairs better than others. Okay, looking at EuroCAD here. What time frame do you like? What pair do you want to look at the 12-month time frame?
It was when we were talking about euro dollar, and I got the chart on, but that's going to be after you finish with EuroCAD.
Yeah. Okay. So I'm looking at a move down here, and we have clear low time frame price action here, and we have, we basically have very clear price action, and I would just look at, just a break and retest here, a break below, and then a retest with a rejection, and I would look for a trade down here.
That's a very nice outside bar as well.
Yeah. Something interesting. In CMT, They don't differentiate between engulfing candles and outside bars.
Interesting.
Yeah, so engulfing candle is the same as an outside bar, and I actually think that an engulfing candle is not an engulfing candle if it's not an outside bar. So, an outside bar is an engulfing candle, while if only the candle, if only the body engulfs the previous body, that's neither. It has to engulf whole price action of the whole trading day previously to be categorized as an engulfing candle, which to them is also an outside bar.
I understand that. The thing is that there are outside bars that are not engulfing because they are the same color or the same direction, but they have the same characteristics in price action as normal engulfings, right?
Sorry for interrupting.
So
I'm gonna be back in a while, and I'm gonna bring the CMT book, and I'll actually look it up here. I'll be back in a bit.
very interesting, very interesting. In the meantime, I will look at euro dollar on the higher time frame in the super macro, the 12 months time frame. So let's look at that. I'm going to be that's my chart. So yes, this is the 12 months time frame as requested by Risa Kase, I believe, right? If I pronounce that correctly. So let's look at that. I don't look at this time frame, but it pays to, the monthly is big enough as a time frame already. But it makes sense to look at higher time frames if you have reasons, like because the market is fractal. If you have signals on those higher time frames, you can use them to your advantage. For example, you have this outside bar right here. We have these two bars on this is just an example how you could be using the higher time frames as well for your trade. If you have that outside bar at the close, you had a very strong reason to be short on this pair, and you can see that for the coming 2 years it actually went much lower. So that could give you a lot of edge, having a good bias like that on the higher time frames. But let's go to the market current prices. What do we see on the higher time frames? We do have a bullish order block on the 12 months period on the yearly time frame, and we did have a wick that violated or squeezed that order block, but it never closed below it. So to me, it's still valid, although it got weakened by this. And the other thing is, it's the second attempt or second retest. This was the first retest, and that worked very nicely, right? That you got that in the impulsive move that we normally want, right? This is the engulfing, that's the move, goes all the way up, comes back for the retest, and this is the move that you expect out of that order block. But it has done its job already. And so on the second retest, and you can see this as well as how far it is squeezed on the second retest. It is less likely to hold, but it still can exert some pressure on price, on some buying pressure. But what is current price action telling you about that effort or that influence, that buying pressure that it's supposed to be exerting on price? It's not there, right? As you can see, we're at the last month, at the end of the year. And if it closes like this, it's going to close as a bearish engulfing, of course. And that doesn't make sense if we're expecting buyers to come in. So it looks very bearish, and if it closes like this on the yearly time frame, it looks like it's going to. That speaks of weakness of this order block, meaning it's likely to be broken. The next candle, which will be the end of next year, 2025. But more interestingly, if we look at the 6 months, what do we see here, right? I know the viewer asked us for the 12-month, and that's the only thing I can see on the 12-month weakness where buyers should be coming in. But what do we see on the 6 month, right? Prices have come to that area. It is also an area that's the same structure. You see a same fresh order block that was retested on the 6-month time frame and did its job, comes back for the second retest, and it's the same thing. It hasn't invalidated on the 6-month either. However, we see an outside bar being formed right here. Look at this. That's the outside bar. And where is it being formed? It's being formed at the area, right? It's the same story, right? The yearly it was telling us, but this is more, this already closed, and it's a more stronger signal, or a more loud signal, I would say, because it's an outside bar on the 6-month time frame. So that's very, very strong. It speaks of a lot of weakness in EU at the place where it's supposed to be getting bought, right? This tells us that it's likely that if unless it changes in the future, unless it shows us an engulfing of this whole area, right? That could be something that negates this outside bar. Unless it shows us that in the future, it's likely to just go much lower. That gives us perhaps an expectation for what's to come next year. So it's a great. I know it's a. You got to be super patient with these kind of higher time frame, um, analysis, because it takes very long to get your answer, to get your signals. But this is very clear. It doesn't happen very often. You get an outside bar on those higher time frames, right? Outside bars are not created all the time, but we do have an outside bar that hasn't been closed yet. Well, you have to wait for that, for the December to close to pass. So you have the closure for that outside bar, but it makes sense. Look at that impulsive move down that violated or squeezed that order block. And we had an order block that was created, and that outside bar comes as the order block is this. I didn't paint it in. This is the order block that was created in the direction of the impulsive move, right? So you have so many things telling you that price is trying to go much lower. I'm gonna make it a monthly, although it's not a monthly, of course, it's a much higher time frame. But you have the impulsive move, which is this, right? You have the retrace, and then you have at the end of that retrace, you have that bearish order block on the monthly being formed. And as it was retested, it created, or it is creating, it hasn't closed yet, it is creating that outside bar. So there is a lot of cues that the market is throwing at us, telling us that EU might be heading lower next year. We'll have to see if it is able to close as an outside bar at the end of the year, and maybe even close below that order block, that bullish order block. If it does that, then to me that would be like all lights on, telling us this is going much lower. So it's a great great suggestion there from our viewer to look at that higher time frame. Let's look at the chat. We have something. Any other questions? No, we don't. And in that case, I would be looking at the lower time frames, because I do see some interesting price action that we could be using. As I mentioned, we don't see that break of structure on the bullish break of structure on the daily yet for the EU. So as long as it doesn't happen, I'm going to be very cautious if I'm going to be long, not hold it for very long, maybe a day or two, at most 3, but not much more than that, because if as long as it doesn't break this, it's likely to just continue for much lower. I mean, as long as it doesn't break that break of structure, right, that neckline, it's likely to go continue to go lower as it is getting into those demand area. Even though they are demand, I mean, we need to wait for price to give us the confirmation or the signal that it wants to reverse. We just don't buy it because it gets into a demand area, because that's not how the market works, right? The market will tell you when it is when the volume comes in, when the buyer pressure is telling you that it makes things much more probable for a reversal to work. And you want to be on that side of the probabilities. But we haven't touched this daily order block yet, and that's what I'm waiting. It looks like we may get that today, but it looks like, well, maybe at the end of our session, the trading session, I mean, we might get this, because it looks, there hasn't been much buying yet. It's all weakness. So I expect prices to just continue going lower until we start building those reversal patterns again. Which we don't see yet. Other than that, there is a bigger quasi, but these entries are much lower, so they're not relevant right now. I think what's relevant is how price will react to that upper border on that daily order block, which is this line right here. And we don't have much information on that because it hasn't tapped into it yet. Let's see. I'm going to take this out so it doesn't obstruct our views on the lower time frames.
I'm going to try to add. I found
extra
cameras. I'm just gonna try to add an extra camera here. I don't know how it's gonna look, so we'll see. Just so you know, if something weird happens, it's me in the background.
No problem. So yes, since it hasn't broken that neckline yet, it makes sense for us to be looking for that short, right? Even though we have a case is being made for a reversal here, as long as it doesn't show us, it makes sense for us to be looking for that short going into this area, because of course not all demand areas are respected. They get broken all the times, and not only that, the higher time frame trend is strongly to the downside, right? If you look at the order flow, yes, we expect some bullishness coming in on the weekly, but there's a lot of space still before we tap into that order block again, if we do that. So recognizing that, I would be on the lower time frames, I would be shorting these areas which are on top of the weekly fresh order block, as price is showing, before it shows us the actual reversal happening. Once it does it, of course, you need to listen to the market and adhere to that reversal pattern that is being shown to us, which isn't the case yet. So as long as it's not showing us that reversal pattern, bullish reversal, I mean, then we're free to look for lower time frames shorts. And we did have one today, which was the outside bar that was created right there between these two, that candle and this candle. And as price was getting into it for the second time, that was this retest. That was the area to be shorting based on that H4 order block. And that's what I mean. Even though we are on the weekly waiting, not anticipating, but waiting for a possible reversal to bullish order flow, in the meantime, price is not telling us this on the lower time frame, on the H4 and lower. So you gotta know what the time frame, what the signal is, how to apply it. Is it something now? Is it for the coming few days? Is it for the coming few hours, or the coming few weeks? Right? Knowing that context of the signal makes a lot of difference. And we had on a lower time frame, which was this, that was the entry on the lower time frame to be had. That was this is the reversal retest of that H4, which is also on the H2. So there you go, you have that alignment right there, H2 and H4, telling you that this is an area, if it gets retested, which it did get retested, it's a great area to short. And that's exactly what price did after it came in, retested that last order block, and just changed its mind to the lower side. So that was a great trade. It didn't signal me to be fair. But even if it doesn't signal me, I mean, there's still a trade there to be made. That's on EU, Jonathan. How is that third camera coming on?
Like, great. I'm trying
I think you're
to
muted.
set it up here. Like,
Oh.
I just need a couple of minutes extra to set it up here.
No problem. No problem. Maybe we can look at. I was looking at GU, but I think GU is much more. How would I say? Not so clear into what it wants to do. There we go. We have now EU tapping into that daily order block. Right.
Get an alert on EU, right? Is EU breaking down?
Did you get an alert on that breaking of that? Not breaking.
Yeah. Okay.
But
So
that
EU is breaking down.
block?
We got EU breaking down. We got Euro CAD breaking down potentially as well. So yeah, gonna be an important 1 hour close right here, and then also in 30 minutes we do have manufacturing. Now we got a manufacturing PMI coming out in about 30 minutes. So yeah, okay, yeah. That's man, that sucks. I mean, will I really get a confirmation right on the candle close that also gives high impact news event? That is not a good confirmation, not a good combination.
No. Yeah, because you want to have had that before, not at the same time.
Yeah,
that's true. All right, so if we look at the probabilities, not the probabilities, but Hamed asked us to look at the Dow Jones, the US30. Let's look at that because on EU, basically what we discussed is what there is to say. We don't have the breakup structure on the daily, right? So there isn't a reason to go be looking for any quasis on the daily time frame. There is a daily fresh order block, but if we go to the H4, there isn't a reason on the H4, at least not yet, to go long. And other than that, the other structure that was tradable was the one that I just explained or talked about, which is the outside bar that got retested a few hours ago. Right, that's it. So besides that, there isn't really a reason. There is no alignment. There's a daily order block here, but it's quite wide, and there is no H4 reason for us to go long. In absence of that, I think it's better just to wait for the setups to form rather than forcing yourself into the market thinking there is something here, because if you want to, you can see an opportunity in just about anything, right? And that's not the way to be trading. All right, so US30. Let's look at US30. What do we have? Let's look at. Do we have one from Wanda? I'll just take the first one here. Maybe this
US30 one. Should be good.
All right, let's look at the monthly time frame. That's a huge candle that we just closed on Friday. It's as bullish as it can get based on that candle. We do have an outside, not an outside bar, but is it an outside bar? I think it is. Technically, it is. It is an outside bar, but it's an order block there that, if right comes back into, we could use for an entry. But you can see already, right? That's another outside bar on the monthly. So it's so bullish that it prints consecutive outside bars even on the monthly time frame, which goes to tell us how bullish things are on the equities. We do have a bullish order block as well on the weekly, and it all points out it can't even retest those bullish structures it creates. That tells you how bullish things are. That's another sign when it doesn't make those. That's cool, man.
Look at my
That's
window.
some cool stuff there.
I had to put cardboard for the window to make sure I can control all the light in here. So when I got the lights turned off, like gets pitch black in here. You can see those lights in here.
Nice.
Got my own
This
little
is
studio in here.
like behind the scene footages.
Yeah, man, behind the scene. I'm not gonna show it all though, because it looks like yeah, what it is. But yeah, this is
Nice,
my
nice.
little space here.
Ooh.
Quite bright. It is really bright actually. Okay, someone spamming the comments. Let's see. Sir, in previous month I had won a giveaway of 28 made, but I informed them Cupid is not working or spam. Okay, so what I want you to do right now, send me an email to Jonatan at JonatanR@the5ers.com or tradingroom@the5ers.com, and I will make sure that you get taken care of. I will check it out. I will see if you actually won with that email that you're sending from. So make sure that you're sending from the email that actually won the giveaway, and we'll take care of this. No one's going to be left behind. I do know, however, that during the bootcamp trading week, we had a lot of giveaways, and there might have been a couple or one. I think it's like one account that didn't get claimed. So make sure you email me with the account that won.
Yes. So continuing on the Dow Jones, what we have is on the weekly we just mentioned, we have a bullish order block that hasn't been retested yet. That can be a opportunity for when and if price gets to that area, but that's not the case yet. And what do we see on the daily? There are no bullish order blocks being created yet, but the area price action. What we're seeing is after price broke this previous high, which is this area, we are firmly above it, and we're consolidating. And if we look at, where price is, by holding on to this price and printing bullish bars, even if they're not, forming bullish structures, it's telling us that it's strong, and it's strong after the breakout. So it looks like this can have some more space upwards. It looks like it's going to continue higher, because that's what price is telling us. It's showing us strength after the breakout. So it looks like it wants to it's gathering its forces to keep on going higher. It's consolidating as it's going higher. You can see that on the low, on the 4 hour as well, how it came back, retested that broken previous high, and now is just building upon previous structures. Right, we do have some H4 here, and this looks very bullish. It looks like look how price came back to retest that H4 order block. And the reaction it had is exactly the reaction we expect from a bullish structure, right? It goes all the way up, comes back, retested, and it gives out that confirmation, builds a bullish order block, and another one. And this one doesn't even touch it anymore. It continues. So this looks very, very bullish in terms of the structure. So I would expect that this will have more upside to it coming sessions. That's my take on. I don't know what time frame Hamed wanted me to look at it, but basically on the H4 and higher, this looks very, very bullish. If I go to the low time frames, perhaps I can find a reversal pattern, but given the bullishness of the higher time frame, I wouldn't be too eager to do that. Look at that impulsive candle, right, that it created here. You don't want to be shorting something like that. At least if you do, maybe just a scalp, but not much longer than a few minutes, perhaps max an hour, but that's it. H1, Hamed tells us H1. All right, so let's look at H1. That's the time frame I'm looking at. There was a break of structure here, but you got to be careful with that given the higher time frame. And did we get the invalidation of that quasi. We haven't yet. So there is a short possibility here. That's an entry order block on the H4, on the H1. We don't have anything on the H. We do actually have something on the H4. I didn't see that. We do have is this still fresh? Let's see. It's 1, 2, 3, 4. Not exactly. Well, it is a mid-single digit number, so yes. We do have an H4 and an H1 and perhaps even an H2, which is also a quasi. So yes, there is a short. Actually, Hamed, there is a short here, and it's given the higher time frame. I would be careful not to be too ambitious with the TP. But there is a reversal pattern that has alignment on the H4, H2, and even on the H1. So I would be looking. If I were to trade this, I would be looking for a structure on the lower time frame within that area. And let's go look and see if we got that. Maybe we did. Remember, we have a lot of news coming out this week, so don't be a hero thinking it's going to go all the way to your TP if it's a long way far to your TP. Let's look at that. The quasi, I don't see on the 15-minute any reversals. This head, by the way, for a quasi, this head has been invalidated on the lower time frame. So if anything, I need to form a new quasi, a new reversal pattern based on this order block, and it's not showing that on the 15-minute. Not on the 5-minute as well. We have a lot of buying coming in though. That makes sense, but I would need something. I need a structure to use to be able to participate in this. Let's look if we do get something here. Yeah, that this could be something. Right, but we don't have to. But I don't have an entry order block on the 5-minute, so it's kind of tricky. But the area is a good area to be looking for a short. I stand corrected. This area, for at least for a day trade, I think it's a great short opportunity. Before I noticed the alignment, I wasn't too sure of that, but now that I do see it, it is a great short to take there. No problem, Hamed.
We also have. I want to switch over to my screen.
You're looking for
we do have. Sorry, are you? Yeah, I just want to show you here that USD CAD here. We are looking at a breakout happening right here, and I want to start looking into the option of perhaps adding to this position. My biggest part of the position will be added on the reclaim of that level right there, and stops will then be moved based on this structure right here. And looking at, so I'm obviously long USD CAD here and long USD on the macro time frame here as well. We are talking about weakness in the euro, strength in the dollar. Looking at USD CHF, we do have a really good level above here as well. And if we zoom out on the weekly, we'll see a big range here. It's quite visible on the daily here as well. And we've now reclaimed that range EQ, and a reclaim of that level, I'm thinking, will take us up to this resistance above. So quite a big move here. And it's basically based on the idea that we're going to see dollar strength leading into December. Looking at Euro USD, we do see a move down on Euro USD as well. Very big move on the daily. I would have wished this to be a Tuesday. If this was Tuesday, that would be wonderful. I'm not really confident in the Monday moves, especially not big moves like this one. But we are breaking down quite confidently right here to make sure that I take every news into consideration here. I will wait for the 4-hour candle close here, That's going to be later this evening. Obviously, going to be closing in 3 hours. So that also gives me a good idea of seeing if this is a fake move on the on a Monday or not. And also, EuroCAD is sort of breaking here, but of course, I'm already long USD CAD here, so got to be careful, right? And you also see here the difference between Euro USD and Euro CAD. Euro CAD didn't really break down. Euro USD, however, is breaking down. So there's more. This is more to do with the strength of the dollar and not the strength of the Canadian dollar, right? Because you can see here that Euro USD breaking down, Euro CAD holding support, while USD CAD is moving to the upside. So there's definitely you have to go with the right pair, and I think in this case Euro USD is the right pair. Euro GBP actually finding support. Most of the Euro pair is actually not giving us that super bearish price action, but Euro USD is definitely giving us strong bearish price action here. So yeah, it's gonna be very interesting to see what the news come out with here. I actually wanted to mention something here because I got the CMT book right here, and I'm reading about different patterns. And when it comes to the Quasimodo pattern, the only thing that differentiates the Quasimodo pattern and the traditional head and shoulders is just a sloping neckline, right? Yeah.
Yes.
So when I'm going through the book here and I'm looking at,
and the sloping neckline, the sloping neckline is that asymmetry in because that's the definition of Quasimodo is it's an asymmetrical head and shoulder, right? It's not symmetrical, and that's the same thing as the sloping neckline, because that's the symmetry that is not there that you do have with the head and shoulder.
So why does the word Quasimodo exist, and why are people talking about the Quasimodo pattern and not the head and shoulders?
I think because it's marketing? A specific. No, I don't think so. It's much more than that, because a head and shoulder, because I mean the force to create a Quasimodo is much bigger, much larger than the force needed to create a head and shoulder, and that is where the power is. It's the same thing with an outside bar. An outside bar, the force that needs to be there to create an outside bar is much. You require a lot more from the market in order for it to create it than to just a regular engulfing, and that's the power of it. So it's the same way an outside bar is an engulfing on steroids. I would say the Quasimodo is a head and shoulder on steroids. It's an enhanced. It's a stronger pattern than the classical one.
Yes, and you're absolutely right. And there is it actually says right here. It says that although the neckline is often horizontal, as in a support line, it can also be a downward or upward sloping. Indeed, there is some evidence that an upward sloping neckline in a top formation produces better results than a standard horizontal neckline. So when testing this, a upward sloping neckline, which is a Quasimodo, as a top formation, has better results than any other formations of the head and shoulders. So this would support that the Quasimodo pattern, instead of the regular head and shoulders, is more profitable. So people that are saying that Quasimodo is better is statistically right. There's scientific evidence to support that, which is quite interesting.
That's very interesting. I never read that, so it's nice to hear that. But I mean, I even without reading it, the data pointed that out, so I knew that already because of the data. But it's very nice to hear from other sources, and this reputable source, right? This is CMT. This is not any kind of
Yeah,
just
I would
regular
say
trade.
that CMT. I think there's one other type of CMT is almost like an institution in technical analysis. It's like the golden standard of technical analysis education. I mean, it is like it's gonna take me 3 years to go through this to get the actual CMT designation. So it's about 3 years. I mean, this book alone is 800 pages that I'm going through right now for the first test. I'm gonna be having a test on 800 pages. Like, it's crazy.
I was when you were doing that. It sounds when you were mentioning that you're doing that CMT program, it sounds enticing to me as well. I always liked studying
Oh, you're gonna love
and
this.
and so I actually every time you mention it, it gives me that idea to join you in that
Yeah,
endeavor.
at least get the book. I mean, it's about, I think it's about $200 or something like that, because it's as everything when it comes to course curriculum, like it's insanely expensive. But
Hmm.
still, I would argue that it's everything you need with technical analysis. It explains it explains everything and all the indicators. It gives like the best foundation when it comes to technical analysis. However, I would say that it's for those that really want to make trading their career, and maybe not only for, if you're a technical analysis nerd, then this is for you. But also, if you want to make a career in trading outside of actual trading as well, maybe you want to be like advising advising companies, advising banks on technical analysis, then CMT is needed for that. The name of the book is, so this is the one I have. This is an older version, but it's the basically CMT level 1 curriculum. I bought this in 2020, so I bought this almost 5 years ago now, and I need to I'm gonna mail CMT to see what the difference is between this one and the new 2025, because I want to make sure that I don't miss out on any new information. But it's really good, and I would recommend that if you are really interested in taking, really creating a career in trading, maybe working for a bank, working for an institution, working for whatever, when it comes to technical analysis, then CMT is really the gold standard of technical analysis. It's gonna cost you maybe 4K USD, 5K USD with everything. But if it's an investment in yourself and your own career. I wanted to show you this. So right here, this is what they have as the engulfing candle. So you see that right there? That's an outside bar. And they categorize this as an engulfing candle. And they don't even mention outside bar. However, they do mention outside bar in the section of bar charts. So with bar charts, you have outside bars.
Hmm.
And that's the only time when they talk about the outside and inside bars, basically. And that's obviously, but yeah, it's interesting. And I think actually, yeah, I've really started thinking about that, and I've started testing, when I have a bullish engulfing candle, and then I compare it with an outside bar. The outside bars are the much better statistical edge. Like, it's just, I'm actually, you know what? Something interesting. This is kind of gonna blow your mind. The engulfing candle that they talk about, which is all what we talk about as the outside bar,
Okay.
is the least profitable pattern. It's statistically, like,
Okay.
they've done research on this, and it's the least profitable pattern
That's
out of all the patterns.
That's very interesting. But how do they measure it? Because it depends. I have tested this, of course, because that's what I trade every day. I've tested it, and it's very different. It matters a lot where how you enter, right?
Yeah.
If what you're because if you only enter at the close, then of course it's very difficult to make a profitable system out of it, because you're basically buying the top, right? And
Yeah.
that's what you shouldn't be doing. The same with with breakout strategies. Is what makes it difficult. You need to find an area where it makes sense for price to continue, and if you buy the close of an outside bar, it's going to be very difficult, because that may have been everything the structure has, but it's the retest that's the juice. That's where the gold nuggets lies. It's in the retest of that order block, which is within. So there is some depth, some nuance to how to trade the outside bar.
Okay, so yeah, I mean, I absolutely agree with you. Trying to remember how to actually speak. I've been doing so much reading that I forget about the actual speech mechanisms. So,
Yeah, I would be interesting to look at how they did it, and
yes.
compare that to how we use it in real time. Because, for
But
example,
the
the
thing is,
outside
if
the go ahead.
the thing is, the chapter on candle. I believe that the chapter on candlesticks is it's about 70, maybe 100 pages, right? And for those 100 pages, this is the references, right? Like they have two full pages of references for the statistics that they talk about. So obviously, to understand how they came to these conclusions, you would have to go through the research of the people, because there's actual research backing this up. They have you can go to a public library for scientific reports, and they do have multiple scientific reports stating the profitability of these patterns. But you obviously have to go and look at the scientific reports to see how they were, how they did the testing, to determine on yourself if that's the right way of testing or not, because it's subjective, right? The way you buy a bullish outside bar is subjective. There's no true rules to technical analysis. It's more of a art than a science, right? So I would argue that I would argue that the outside bars are extremely profitable when traded in the right way, like extremely powerful and profitable, just like the pin bars. Like the pin bars can be, like, all you really need, in my opinion, is pin bars and outside bars, because they basically show you most of what you want, when it comes to candlesticks.
Well, yes. You gotta understand that this textbook, has a way of measuring things, and if and in order for us to know the value of the conclusion they got onto, you need to know what the method was, as the same way with every research, right? If you want to know why they got to the conclusion, you got to understand the method they use to gain that. And maybe the method is telling us something, but it's not telling you, it's not the answer to your question, right? And my question, for example, was, and I answered that myself on my own data: what is the predictive value when price comes into that order block when it's an outside bar, which is a segment of the range of those two candles. So I don't use it as an entry for many structures, many candles ahead, but just within that two. Maybe I should show it on the on the charts. Let me get an outside bar where we can talk about it. Let's see if I have it right here. I have one right here. And this is actually a very beautiful example, right? My way defining the outside bar is, right, well, it's not my way. That's the definition of an outside bar, where you have these two candles. Let me point them out. This one and this one, right? That's an outside bar. If we move a little bit closer, these two candles, they form the outside bar. You have let me make that bigger for everyone, even for those watching us from a small screen. You have this range, right, which is the first candle's range, and you have the following candlestick, which takes out one side and closes outside that range, right? That's an outside bar because it travels outside the range. It exceeds the range of the previous bar, not only the body but also the wicks of that previous bar. And as you can see, it isn't an engulfing, right? The definition of engulfing is where you have a opposing direction, right? You have the body of the second one engulfing the first one. It's not doing that, right? It's not engulfing, but it is an outside bar. And I mean, even currently you can see what the reaction is. Price are likely to go to retest it, and they move strongly away from them, right? And that's something. But we need to understand. I'm very intrigued to look at how they measure the outside bars and how they what their entries all are and what their TPs are to measure what the predictive value of it is. So I understand what their conclusions is in my back testing, in my data. This is how outside bars very often they react. Price they create. This is the outside bar, right? This is the range. To me, this is a range that needs to be retested. Price comes back, retests it, and moves away from it. Perfect price action of an outside bar. And I don't have that textbook, but I would like to. Maybe I should buy it and look and figure it out how did they did it.
Yeah,
It's
I
very
would really
interesting
want
though.
to.
And
Yeah, we got the. I just want to. We got the news coming up here in a couple of minutes. Make sure that we. Oh wait, the U.S. S&P
2 minutes.
manufacturing PMI. Let's see. Yeah, 2 minutes.
2 minutes for the PMI, manufacturing
So
PMI.
the U.S. S&P manufacturing PMI came out higher than expected, which should give us a pretty good idea of where the manufacturing PMI would come in, and I would think that that is going to come in higher than expected as well. So I will. Okay, I'm not gonna obviously enter a position now because then I will be. I'll be losing a couple of accounts probably, but we'll see. Because I have accounts with other
You don't
firms
want
as
that.
well, like FTMO for example. I'm pretty sure. I'm not sure what rules exactly they have, but I'm pretty sure I can enter right now. I wish I saw that earlier though, because I would
It
probably.
depends if you're on a swing account or not.
I'm on a swing account. They don't have news rules for that.
No, not on the swing account.
Nice. All right. Then it's only the high stakes account on the The5ers I have to be worried about. I gotta look at the other firms. I have one with Alpha Capital as well. Let's check that out. Oh.
Let's look at the market reaction as we're getting close to that
Oh
news.
wow.
The news is going to be 10 seconds to the news.
We'll see.
You can hear a needle fall. No gap. First few seconds, not a lot of action.
I don't think
Maybe
it's
it's
out
still
yet.
to come.
Okay, the 48.5, 48.4, higher than expected. Okay, EU is going to drop. EU is going to drop. It's not dropping though. It should be dropping. Okay, this is a good opportunity to enter a position. Okay, so when can I enter a position?
2 minutes after the news. So in about 1 minute and 15 seconds.
Yeah, there's no way EU is going higher from here. No way. Maybe up here. Like maybe up here for some weird magical reason. And if we do come up here, I am going to call up Christine Lagarde. I'm going to ask her to get the money bags ready because I'm shorting. There is no... Yeah, it's at ATR. It is, but it EU doesn't care about ATR right now. I do think we're in a scenario where EU is just going to keep on dropping. And are we seeing
ATR,
USD?
the ATR is it depends on the context of where you use the ATR, because if on a normal day you can expect price to bounce off the 100% ATR, but on non-normal days or days where you can expect higher volatility like NFP,
Holy shit!
then
Look at that. Yeah,
100% is not.
Eurocad breaking down as well. Okay, I'm going to be entering a trade here on Euro USD. Doing a short. Where do I have my stop loss? I'm gonna be risky. I'm gonna be risky, and I will place my. Why do I want to do that though? Do I want to take a risk here? Do I think it's going to continue lower? Yeah, I think so. I'm gonna take some risk here. Small position, 11R trade. No, okay.
Nice.
Obviously, I'm not entering up here. I'm entering down here. It's okay. 11R turned into 5R. That was a bit anticlimactic. Okay, let's do that. Okay, let's do it. Or that's going to be my stop loss. How much am I risking on this one? Probably $100 on the first entry. Max risk for this one. Probably 300. This account. What time is it? 16:03. Okay, I can enter this one. Go. Is it market? Short instant, yeah. Let's go. Let's get rich. Marco says, "Don't do that. You're not the boss of me. Do whatever I want. This is my account." Okay, let's go. We got USD. We got EuroCAD breaking down. I'm gonna be entering a short on EuroCAD as well. Obviously, I view this as pretty much the same trade. So small risk on this one as well. Where do we have EuroCAD? That's right here. You know what? I'm not sure I like EuroCAD though. This is going to be a smaller position. Putting a lower risk on this one. You know what? Let's look at the reaction on EuroCAD. No, I'm going to wait with EuroCAD. I don't like that. I don't like EuroCAD. We're going to wait for the 4-hour candle close on this one. Okay, Euro USD.
You want me to show your chart?
Are we not looking at my chart? I've been okay. I think I'm done. Okay, so I entered. Obviously, I entered Euro USD here, and if we move up here and see a rejection, I'm gonna enter a new position up here. And the reason why I was not entering my short position on EuroCAD is because I'm not really seeing the breakdown as heavy on EuroCAD as I saw on EURUSD. And also we have this area acting as support. So I want to see a move lower, maybe 4-hour candle close here, and then move higher and then enter on the possible retest of at that level. On USD CAD, we are in a better position here, and I will, based on the 4-hour candle close, add to the position and limit the risk on this trade. All right, guys, I think that's it for today. Don't forget to join us tomorrow when we are going to have the community manager for the Portuguese-speaking community, Pedro, coming on, and we're also going to do the raffle, the giveaway for the Black Friday giveaway raffle. All right, guys, thanks for joining today, and I hope to see you all tomorrow. Take care, and see you tomorrow.
See you guys tomorrow. Bye-bye.
Hi guys, so thank you very much for watching the video. Now make sure you like and subscribe, and most of all, go into the YouTube and check our other content that we provide here at The 5ers. We'll see you in the next one.